Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning and welcome to Wednesday. Great to be with you. This is Peter Lewis with Money Talk on the 23rd of August. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. Thank you for listening and for making this one of the most popular financial podcasts in Hong Kong. In today's business and finance headlines, President Xi Jinping called on South Africa to join him in boosting the country's combined influence on international affairs in the global south. He told South African President Cyril Ramaphosa in Pretoria, ahead of the BRICS summit, which starts today, that the two countries should strengthen strategic cooperation and promote representation of countries in the global south. China is expected to push the BRICS bloc of emerging markets to become a full-scale rival to the G7 this week. Srettha Thavisin, a former property tycoon, has become the first new leader to take charge of Thailand since 2040, when former army chief Prayuth Chan-o-cha staged a coup. He's an ally of former Prime Minister Thaksin Shinawatra, who returned to the country yesterday after years of self-exile. Thailand's stock market and currency jumped following the end of months of uncertainty since the May election. Japan said on Tuesday it will start releasing more than 1 million metric tons of treated radioactive water from the wrecked Fukushima nuclear power plant into the ocean. Hong Kong Chief Executive John Lee condemned Japan's move, describing it as irresponsible. And the SAR announced Tuesday it will impose an indefinite ban on Japanese seafood imports from 10 prefectures and publish the results of daily tests on other food from the country starting on Thursday. On today's programme, I'm joined by Carlos Casanova, Senior Asia Economist at UBP, and Frederick Chu, Managing Director at Magnum Research. With a view from Japan is Tokyo-based journalist and author William Pesek. And if you want to get in touch, please go to my website. You'll find it at peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
On Wall Street Tuesday, US stocks fell in quiet trading ahead of flash PMI data due today and the Fed's economic symposium at Jackson Hole on Friday. The indices were weighed down by weakness in the shares of banks and retailers. The S&P 500 edged 1/3% lower to 4,388. The Dow slid 175 points, that's 0.5% to 34,289. The Nasdaq Composite eked out a small gain of 0.1% to close at 13,506. Chipmaker Nvidia, which is due to report earnings tomorrow, ended the session down almost 3%, erasing an earlier gain. US Treasury bonds were mixed Tuesday, with the short end of the Treasury curve remaining under pressure after Richmond Fed President Tom Barkin suggested that US economic growth could re-accelerate before inflation cools, and he talked up the prospect of future rate hikes. On Tuesday, the two-year yield rose further above 5%, adding 4 basis points to reach 5.05%. However, the 10-year bond yield eased slightly from a more than 16-year high, dropping 2 basis points to 4.33%. In the currency markets, the PBOC cut the onshore yuan central parity rate by 5 pips to 7.1992 per dollar. That's 1,111 pips stronger than market consensus, and that's the largest gap compared to consensus since it was first started to be polled in 2018. The yuan is trading at 7.3066 in Hong Kong this morning. Hong Kong's Hang Seng Index rebounded from a 7-day losing streak, which had dropped it to a 9-month low and put it in a technical bear market. It gained 168 points, or 1%, to end the day at 17,791. The reversal came after the 14-day relative strength index fell to 27.3. That's below the 30-point threshold that technically indicates the market is oversold. The tech index rose 2%, recouping some of the almost 13% loss from the past 2 weeks, and the China Enterprises Index of the largest Chinese listings in Hong Kong rose 1.1%. It has plunged 11.4% this month to become the worst performer among 92 global equity gauges. On the mainland, the Shanghai Composite rose 0.9% to 3,120 after earlier in the session hitting its lowest level in 7 months. Looks like the market's going to decline again though this morning. Futures markets are pointing to a loss of about 150 points for the Hang Seng at the open. That's 0.8%. You can get more details on the latest market movements in my daily newsletter. at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
On this Wednesday morning, let's welcome our guest. Pleased to have with us in the studio Carlos Casanova, Senior Asia Economist at UBP. Morning, Carlos.
Very good morning.
And also with us, Frederick Chu, who is Managing Director at Magnum Research. Morning to you, Frederick.
Hi, morning, gentlemen.
Let me start with the China economy. A bit of a disappointment, really, wasn't it, this week after the latest policy decision by the country's central bank undershot market expectations. The PBOC announced a reduction to the one-year loan prime rate of 10 basis points, but left the five-year rate unchanged. Carlos and Frederick, were you surprised by this, given particularly all the talk we've had over the last few weeks about the central government acting to boost the economy, stabilise the housing markets, get people to go and spend and consume more, make mortgages more affordable? Here was its chance to do something, and it sort of passed it by.
In all honesty, I was a bit surprised, but in hindsight, I think it does make sense that they decided to deliver a smaller rate cut this week. The bank sort of cited three reasons for that. The first reason being, of course, there's a lot of pressure on the currency front, so delivering an outsized rate cut would have only exacerbated depreciatory pressures on the yuan, and they are sort of trying very hard to fight one-sided depreciation expectations. So the timing wasn't the best. The second reason was banks had expressed concerns about declining net interest margins, and so they are lobbying for another deposit rate cut if the central bank is to do more aggressive monetary policy easing. So that might have been a concern as well. They're still sort of ironing out some of their differences, and hopefully we'll see both deposit and lending rate cuts in the remainder of the year. And the third point is that there have been some issues in policy transmission, so it would have been an ineffective outsized rate cut in any case, and so it's likely that they will try to prioritize some of the macroprudential easing or other measures before they deliver that rate cut in order to maximize just how much of that extra liquidity flows into productive sectors of the economy as opposed to just going to SOEs and an evergreening of loans.
Yeah, I think the market is definitely disappointed, probably because they put too much of expectation by after the Politburo meeting last month. That the market expects the central government would put in more solid policies to support the economy. I think the dilemma for the central government is, if you look at the yuan rate and the rate gap in between China and US, you probably realize that China is just not ready to pour in a substantive amount of monetary easing at this point of time, given the real estate crisis, country garden, etc. I think the central government has more to deal with or consider before they put in more solid substance. I think the two parts of the markets are looking at this. One side of the consensus is China has still got loads of policy to implement, but it's just not ready yet. So more or less same as what I just described. And the other front, it's basically they just run out of ideas or policies to come up with. In my opinion, I think what China do have much to do in terms of stimulating the current situation, but they'll probably wait until there is a more clear-cut road on how the Fed fund rate is going towards. That which means it's going to be somewhere around the end of this year, and probably if there's more policies really coming out, it probably takes a quarter or two to get digested into the real economy. So it's still a wait-and-see approach.
So on the three reasons that you both gave for the inaction, if you like, by the PBOC, let me dig into them a little bit more. On the yuan, first of all, Obviously, we know the PBOC is pushing back really hard now against the slide in the yuan. It's created a short squeeze here in Hong Kong, making it harder for speculators to borrow. I presume it doesn't necessarily want the yuan to go up. It just doesn't want it to go down so fast. But why wouldn't the PBOC be pleased, or the government be pleased actually with the sliding yuan? It's what the economy needs, isn't it, given that it's slipped into deflation? And if you look at, for example, over the water in Japan, a weak yen there has done wonders for the economy. So why wouldn't the government actually be pleased to see the yuan sliding?
Because they have a sense of déjà vu. For those of you that will remember, in 2016, the 3% devaluation of the yuan translated into a protracted period of almost 2 years of portfolio outflows, and they had to burn through $1 trillion US dollar in reserves at the time just to defend the currency. So although I do agree, the goal is very much to keep the currency weak in trade-weighted terms, meaning that they shouldn't be stronger than all of their other competitors on the trade arena, but they do not wish to see one-sided depreciation expectations, because once you hit certain key resistance levels, the market just keeps testing the next one. So 7.3 is breached, the next level 7.5, and after that it's 8. And they it wouldn't be the most productive use of another trillion in US dollar reserves. So they want to avoid that situation. That's why they are managing the expectations, but they are keeping the currency weak in trade-weighted terms.
Yeah, I'm thinking the same way. I mean, the fund flow, it's a bigger consideration. I think a weaker currency obviously would do good to exports. But then the fund floating out of the country, which has always been the case, which is something that more concerns the central government as a broad base.
I mean, actually, if you look at the currency, although it's weak against the dollar, it's not actually that weak against other currencies, really, is it? On a trade-weighted sort of basis, it's mainly, which suggests it's partly because of dollar strength at the moment, because of the huge yield gaps that we're seeing.
That's right. Yeah, it's always been the case for RMB. It's always just going against the US dollar, no matter it's getting stronger or weaker. That's what I'm saying earlier. For China, I think when the US rates, Fed rates got a more clear-cut outlook, and when the currency against the US dollar gets more stable, that would be the time for them to, really put out some more, useful policy towards the market.
So on the second reason then that you raised, banks' profitability, it's sort of hard to imagine, isn't it, really, that Beijing should be too worried about how profitable the banks are. But is it a big concern? I mean, is it a big issue for the banks?
Yeah, honestly, I think for banks in China, it's never... To me, it's never a very, good sector to invest into, just because of, it's all central owned.
All the controls and everything.
Yeah, it's all SOE basically, and you got a bunch of the provincial and municipal banks that has, outstanding, bad debts, at a very, high level. Whereas, when anything comes up, it's just the state-owned banks is going to bail them out. So all in all, I mean, in a short term, there's some, trading ideas over the bank sector, but for the longer term, I think it's not a healthy economy over the bank sector. China has been putting a lot of, regulatory strings towards the banks in controlling, deposits, controlling investments, wealth management, etc. Given the CBRC has, better, well-established, regulatory framework as opposed to, securities brokers or third-party lenders, third-party wealth managers. So that would be one of the good aspects of the banks. But overall, from financial health, I personally don't see it, as a very, very, prosperous.
Yeah, we are not expecting that the central government will instruct banks to cut dividends or anything like that. That's the main reason why some investors have historically held banking stocks, of course, on a valuation basis, very cheap, and so the market is pricing in an erosion in profit margins. But my understanding of the situation is that big state-owned banks will be asked to step up and rescue areas where there's stress. So there's problems with some of the developers and exposure to unsold units at regional level. So they might have to incur a loss in terms of M&A activity if they have to take over a regional bank with a poor balance sheet. And so in anticipation to that erosion in profits, they don't want to see more measures that might potentially cascade into a systemic issue down the line. So Central Bank is not really concerned about the profitability of these banks, although I'm sure some government agencies, pension funds, the sovereign wealth fund, they will have exposure to Chinese bank stocks because of that dividend that I mentioned earlier. So I don't think they have an interest in eroding, the ability of these banks to pay dividends, but they do need to iron out details with them and make sure that the banks are in a position to step it up and support the economy when needed.
Okay. Now, the third reason you mentioned, policy transmission. I mean, this is the real difficult one, isn't it? Because whatever the PBOC does, whatever the government does, how does it impact the consumer and persuade the burnt-out consumer to go and spend when they're so nervous about what's happening to the economy? It seems to me that this is the big challenge, isn't it, for the Chinese government at the moment?
This is the elephant in the room, I would say. The most straightforward, easiest way to do it would be to do cash handouts. And you would have thought that if they are able to test everyone twice in one day within a period of 24 hours, that they can do cash handouts. I mean, the population would be extremely cooperative if that were the case.
They will queue up, wouldn't they, for much longer than you're going to queue up to have your injection.
Exactly, not great for productivity. But I think they have the means to do it. It seems to be an ideological issue with, capitalism, and China was, of course, very vocal in terms of criticizing the U.S.'s response, saying that, the U.S. Unemployment was structurally high because Americans were lazy, because they were given cash handouts with government. So you have to shift the narrative a little bit before they can do that, and that takes time.
Yeah. I think printing money, it's just difficult in China now. So, it's no matter. I think currently the current policy that come out to stimulate buying houses or buying goods and services, it's just not effective enough because you won't decide to buy a house just because the mortgage ratio has been lift up. So I think employment is one thing. The confidence on the economy, it's the other thing. If you look at U.S., the consumer confidence, it's strong enough to give people the incentive to spend money. But in China, it's just not the case.
It would meet actually all the requirements, wouldn't it, in all the concerns, because if you did a cash handout, it's not going to weaken the yuan, so it's not going to have an effect on the currency. It's not going to affect banks' profitability either. It is the one that would sort of like tick all of the boxes that the government is worried about in terms of stimulus.
It's just too many people in the country that how much you're going to hand out and how many times you're going to hand out. If you look at Hong Kong, the cash handout it's going to give you a short-term boost on the action, but if it has to be long-lasting, then you probably have to go in the Macau way that you give 10,000 on a yearly basis, which is not that feasible if you look at the population in China. And given the M2 supply on, it's the central bank try to manage the M2 supply at the 9% level, which I just don't think it's something that the Chinese government is fond of doing.
Now, here's something interesting. The United States has called on China to be more transparent about the state of its economy. The request comes after the National Bureau of Statistics abruptly suspended publication of youth unemployment figures, which it's been publishing since 2018. The age 16 to 24 category has seen unemployment march steadily higher for 6 consecutive months to hit a series of record highs It then culminated in a new all-time high of 21.3% in June, and then July's figures got cancelled. US National Security Advisor Jake Sullivan said these are not, in our view, responsible steps for global confidence, predictability, and the capacity of the rest of the world to make sound economic decisions. It's important for China to maintain a level of transparency in the publication of its data. So, is he right, or is it none of their business? What do you think?
Well, I think they are right to some extent. The incident is not isolated, so it coincides with an increase in these sorts of cancellation of data series. I think FT had a good chart where they had estimated the number of data series that had been discontinued in the past few years, and sort of it's alarming because it's difficult to follow economic developments in the country. So you have visibility that deteriorates and that makes the country less investable. So to some extent, I think there's an argument to be made that was not the right thing to do. Absolutely. I don't think that the entire population aged 16 to 24 that might have been surveyed is necessarily seriously looking for work. I mean, some of the high schoolers might just be looking for part-time. So there are some issues with that statistic and I think absolutely they should improve the quality of their statistics. And if this is an issue, they should provide an alternative. But
they could keep publishing it, though, while they do that, couldn't they?
Exactly. Just keep publishing it. Or, I think market tends to be rational over time, even though they have, some ups and downs. So they just keep publishing the statistic, use the network of domestic research analysts to explain why they are doing certain things. But cancelling the data whenever it doesn't suit you. Remember a few last year during the March National People's Congress, they also decided to just delay the GDP release by a week or two. These sorts of measures don't instill confidence in the market, and so it's not going to help.
Yeah, I mean, the request, it makes sense. But if you look at the action from China, excuse me, it's understandable. I mean, information in China is always designed for their audience. So, whether you publish the youth employment, it's really how they want to present this to the people within China, rather than giving much more of a research impact to the rest of the world.
But they say at the same time they want international investors. So if you want international investors, you've got to provide them with the information.
Yeah, but that's always conflicting in saying like this. I mean, China wants international investors to invest in the country, but only within the certain aspects of transparency that they can provide, they feel comfortable with. That's always been the case. I mean, if you look at I think what we can at least be sure of, it's the 20% youth unemployment. Even if it's published, the actual unemployment numbers will be way beyond this whatever being published. But considering the structure of the labor market in China, you have slashes, you have self-employed, the young people going opening their own business or being a KOL. That's it's not really something to me like very worthwhile in analyzing the actual labor market. But yeah, that's the case for China, I guess.
There's two other areas I can think of where it will be a huge help if we could get more statistics and data. Not that we're going to get it. One is on the true state of indebtedness of these local government financing vehicles. And the other one is these trust companies and the scale of the losses there on these wealth management products and how much have been defaulted on. I mean, they would be real numbers that would make a big difference, wouldn't they? And help people's confidence in the economy. Even if they were bad, it would at least give more transparency, because presumably this is getting a bigger and bigger problem, isn't it? What's happening in the property sector, the way it's spreading to the trust sector.
Yeah, the political culture of China, it's try your best to tone down all these negativities. The trust company issue, it's definitely something worth worry about, maybe more than the youth unemployment. what we currently know is some of the financial groups of that runs the third party wealth managements. It's probably going down because of that, but we don't have a very clear outlook into how much exactly that we are looking to write down.
Yeah, I'm not as worried as the market. I think last week we saw a big sell-off, and the market was pricing in effectively not only a Lehman moment in China, but contagion to other parts of the world. That's not likely to happen. We've seen almost all of the recovery in the housing sector in the first quarter being eroded in the second quarter of this year. So we're back to where we started at the beginning of the year. And so when you have a very contractionary real estate sector, and remember, a lot of these trusts have exposure. I think there are some statistics that suggest that about 25% of their assets are tied to real estate. Naturally, they are going to see issues emerging if they have so much exposure to the sector. And of course, the shadow banking, it's not unique to China. Every country has a shadow banking sector, and the shadow banking sector is not bad per se. It provides lending to sectors of the economy that are under-serviced by banks, and in China, banks are state-owned, so typically state-owned enterprises get better services than private enterprises. So the shadow banking plays an important role in China, and of course, with the growth of the housing sector and banks not servicing private companies and individuals well, shadow banks stepped in to fill in that gap. And so they do have exposure. So I think it's all related. I think rather than focusing on contagion, what they need to do is focusing on stabilizing the housing sector ASAP. I think that's going to be quite key. Doesn't help, in all honesty, that they are not providing statistics on local government finances, of course, also linked to the real estate sector. Nobody is selling land, so you can extrapolate that local governments are also having a bit of a financing squeeze, and they're working on that. But at the end of the day, all of these issues stem from the slowdown in the housing sector. And by the way, the slowdown was self-inflicted. So although we have
the three red lines,
so balls in the government's court, 100%. Macroprudential easing should be the way forward, and I think they can, if they want to, stabilize the sector.
So the CSRC, the regulator, the PBOC, it called in the big banks, the big financial institutions, and the stock exchanges for this big meeting. The message was increase lending, lend more, maintain the pace of loan growth. Where could banks lend then that would make a difference that they're not doing at the moment, that would help the economy and would help turn things around?
The private sector. That's where you see the biggest decline in credit growth. That's where you see the biggest declines in fixed asset investments. To give you just some data, private fixed asset investment was down minus 0.5%. SOEs are still investing around 7%. So they're still doing their job and going and getting out the loans. So it doesn't help to loan more to SOEs. SOEs are already maxed out in terms of their ability to invest and churn out output. It's a private sector. And of course, within sort of that minus 0.5% year-to-date, year-on-year contraction in fixed asset investments, a lot of that can be traced back to a minus 8.5% contraction in real estate. So I think anything that pertains corporates investing in real estate, the poster child is obviously all of the logistics and SF and new infrastructure so real estate infrastructure, but tied to the logistics. That's typically what most analysts that want to remain bullish on the economy will highlight as an opportunity. But there's really an issue with the private sector investment here.
Yeah, I think the private corps, they do not want to borrow because of weak demand. The property developers, they cannot borrow, so due to the crackdown. So I think if these two streams are being stuck, then there's no way for the banks to lend. I mean, it's consumer lending. It's just not in scope here.
We need to free up, or the government needs to free up the private companies a bit more as well, doesn't it? Because at the moment, all you ever hear is more and more of them being fined. We had another one of the consultancy firms, I think it was Mintz, last night, got another big fine. All we hear about is private companies being sort of really beaten down at the moment. We need to find a way, or the government needs to find a way to encourage them to be more entrepreneurial, entrepreneurial, build their businesses and invest, and not feel that they're going to have their profits appropriated by the government or, have some sort of crackdown done on them.
Yeah, I think the property market plays a major role in all these chains. I mean, it's a very, for Chinese people, almost 60 or 80% of the investment go into the property market. And buying property, it's the biggest consumption of lifetime for everyone. So if the property market it's going down what's at the current level, it's just going to cause a chain reaction towards all sort of that. And what can save the property market at the moment? It's all about money. I mean, it's how much they can keep leveraging on. Redeveloping of the existing the old town areas of the municipal, it's going to help, but without the financing window to open, there's no way they can achieve that. It's really up to how the central government is going to loosen up this front.
Let me finally turn our attention to the BRICS, because President Xi Jinping is in South Africa at the moment. There's going to be the BRICS summit, starts today. The 4 BRICS countries, of course, Brazil, Russia, India, China and South Africa. They're talking about expanding it to a considerable number of countries, also trying to make it much more politically active to rival the G7. What do you think, first of all? I mean, should the BRICS... I mean, it was initially just a term, wasn't it? It was just a label for these originally 4 countries, now 5 countries, but it's sort of becoming an economic forum now, and China, if it has its way, wants it to become also a political forum. What do you think of that?
Easier said than done. I think there was a place and time for a lot of optimism around, but I think it was Goldman Sachs that coined the term.
It was, yeah.
Yes. And so obviously the global economy has changed significantly since then. All these countries are very different. Interestingly, China is at the same level that Brazil was when Brazil entered its middle income trap in terms of gross per capita income levels. And so for China, it should be a lesson how to sort of avoid middle income trap and becoming a bigger version of Brazil. In the current global environment, I can see why they would want to hype up the political clout of BRICS, but the reality is that they do account for a large proportion of the population, of course, but if you look at the G20, it's a much more important platform. So I think that G20 is going to continue to drive the policy agenda a bit more seriously than anything that the BRICS can achieve as a group, even if this notion of South-South cooperation and a multipolar world is something that I believe is beneficial for the global economy and something that China would benefit from as well. So they will pursue actively, but BRICS just might not be the most effective way to do that.
Yeah, I think for China, apart from BRICS, it's just anyone that's non-US, non-European. It's going to be more and more important for them, mainly on the technology investments, because the US and Europeans are going to invest less and less into this area. So it's imminent for China to attract investors from other areas. BRICS could be they take their opportunities. Middle East maybe.
Saudi. They've been asking Saudi to step up their game in the country.
Of course.
But again, if you start including Saudi Arabia and other countries into the BRICS basket, you dilute sort of the impact of the BRICS message. So I think that there are other multilateral platforms that might serve this goal more efficiently.
Yeah.
And if you have countries like Saudi Arabia, or Iran, Argentina, Indonesia into it, they're such vastly different countries, aren't they? It sort of seems, how on earth would you get them to agree? They have such different philosophies. They're just at such different stages of economic development. I mean, it's hard enough to get 5 countries to agree. How on earth would you get these 20 or so countries to agree on anything?
It's hard enough to get China and India to agree on anything. So.
It's true. It's true. Yeah. So it's but so you don't see it as becoming a real competitor to the G7 as China would want it to be.
No, I don't think so. I mean, for China, they the way they do things, it's less on a formality of a group or organization. it can be a BRICS summit, but then all the conversation is one-on-one. As long as they get what they want, or both sides get what they want, that's more important than whether it's a Belt and Road or G whatever. It's not really that important for the government.
Yeah, the best way for China to increase its clout is to ensure its economy overtakes the US's economy in absolute terms. That's where China is going to get its clout from, and that is not happening if you're growing at below 4%.
Right. Well, very interesting observation to end on. Thank you both very much. You heard Carlos Casanova, who is Senior Asia Economist at UBP, Frederick Chu, who's Managing Director at Magnum Research. I'm joined now by Tokyo-based journalist and author William Pesek. Morning, William.
Good morning, Peter.
Fukushima, Japan, on Tuesday said it's going to start releasing more than 1 million metric tons of treated radioactive water from the wrecked Fukushima nuclear power plant into the ocean. That's brought strong condemnation from China, and also here in Hong Kong, Chief Executive John Lee said it's highly irresponsible, and they're going to start banning fresh seafood from 10 Japanese prefectures from Thursday, tomorrow, and also test food every day from other regions. When we spoke about this before, I remember you saying that you didn't think that Japan had handled this in terms of discussions with its neighbours particularly well. Have things improved at all since then?
No, they haven't. And I think this comes days after you saw Prime Minister Kishida meeting with President Biden and President Yoon of South Korea at Camp David in the U.S. And that was a big moment for trilateral relations. And that's now in question because the Korean population is no happier about this than the Hong Kongers or folks in China. And so I think in many ways, this is clearly a bit of a geopolitical albatross for Tokyo. And the timing of this, again, is unfortunate because you do have this moment where we had this trilateral summit in the U.S., a moment where China is trying to basically, in many ways, mend fences in the region. And here you have Japan taking a step that's upsetting neighbors at a moment when Japan is trying to improve trade ties with the region. So the timing could not be worse, arguably.
So has it undone all the goodwill that happened at Camp David? Because that was quite a significant moment, wasn't it? Getting Japan and South Korea together, talking to each other again, and this trilateral agreement saying they're going to meet now every year.
Right. Well, I mean, certainly it could, because one of the interesting things, the dynamics here, is that President Yoon in Korea is a reasonably unpopular president. Prime Minister Kishida in Japan is reasonably unpopular as well. And the Korean population has not really bought into the idea that Korea should be improving ties with Japan at a moment when the South Koreans believe that South Korea is doing all the work and Japan's doing minimal amounts of work. And here you have this water release, which will not help that. I just find it amazing that 12 years after the Fukushima crisis, we're still dealing with this issue. And it just speaks to the problem that Japan has been slow-walking this for more than a decade, and now it's become a geopolitical albatross for the nation.
Should it be focusing on what the International Atomic Energy Agency says, and they've done a 2-year study and say this release meets global safety standards? There's no evidence that the release is going to cause damage to fish. So why is it, well, first of all, why doesn't Japan talk about that more? But secondly, I'm wondering why other countries are making such a big deal about it, given what the IAEA has said.
You make a fair point, because basically what is Japan doing? It's releasing about 500 Olympic-sized pools worth of irradiated water over 30 years. So you can argue that this is a negligible amount of radiation being poured into the ocean. And the IAEA has even mentioned that they believe this has a negligible impact. I think the issue is Japan does need to try harder to explain what it's doing and why it believes it's safe. And clearly the memo that Japan thinks basically the IAEA and its ties with the U.S. Have shared with the region, is just not getting through. And I think Prime Minister Kishida's team has more fence mending to do in the region to basically make the argument that what Japan is doing is not irresponsible.
And will the seafood ban that Hong Kong and presumably other countries are going to impose as well, will that have an impact?
It will have an impact on the economy, certainly. I mean, Japan at the moment is experiencing slow growth and the highest inflation in 30 years. I mean, I know that Japan recently had a GDP number that was above consensus, but generally things are flatlining, inflation is rising. So anything that creates fresh headwinds for trade is unwelcome at this moment, and it will add to basically the political headaches that Prime Minister Kishida is dealing with in 2023.
Okay, well, let's switch our attention to a Japanese company, SoftBank. It's filed, it's going to spin off ARM, which is the UK chip designer that SoftBank owns, for a listing on the NASDAQ. Could have a valuation of about 60 billion to 70 billion US dollars. So it could be the biggest IPO in the US since Alibaba in 2014. I mean, this is a big deal, isn't it? And for all sorts of reasons, for SoftBank, also for the NASDAQ as well, and for ARM.
Yes, it's a very big deal. I mean, also for SoftBank, because in many ways, SoftBank's had a rough few years, right? I mean, SoftBank has pumped about $140 billion worth of investment into startups that haven't really paid off for the most part. So you've seen the Vision Fund retrenching to some extent. And basically, this is the Vision Fund's moment where it can rebuild itself. I mean, basically, it's a chance for Mr. Son, Masayoshi Son, to rebuild his economic coffers, if you will, to chase new deals. And so in many ways, the Vision Fund's outlook for the next year or two depends very, very heavily on this IPO. It will dictate how aggressively SoftBank and the Vision Fund can invest in startups. And that's why it's a global story. It's a bigger story than just SoftBank and ARM. It actually matters for basically entrepreneurs from Silicon Valley to Seoul to Jakarta to Bangalore.
Has the Vision Fund been overrated? I mean, you hear a lot of talk about, that it's one of the biggest technology funds in the world, but its performance has not been that great, really, has it, despite all the hype and the talk about it?
Exactly. I mean, one of the questions is, the extent to which Mr. Son has been throwing $1 billion here and $1 billion there. He's created this kind of island of misfit toys, if you will, this portfolio of companies that I'm not sure that even SoftBank has figured out what to do with. It hardly helped that in the last few years, Mr. Son's biggest bet was on WeWork, which is a company that I'm not even sure is around at the moment. I know they still have an office in Tokyo, but I'm not sure if it's thriving. So that was a very big blunder. And so in many ways, the SoftBank is trying to figure out what it wants to be when it grows up. And what's interesting is Mr. Son, of course, has been spanning the globe looking for investors for a second and third Vision Fund. And so in many ways, a lot rides on this IPO and the extent to which this rearms the Vision Fund to continue investing in startups.
I'm wondering also how investors are going to take this, because the IPO environment hasn't been great over the last couple of years in the US or anywhere else. There's also been a lot of focus on ARM's exposure to China, because there is ARM China, which it has absolutely no control over at all, has no representatives on the board at a time when there's a lot of scrutiny about companies' investments in China. I'm wondering how much that might put investors off.
Well, you're right. I mean, ARM China really is everything in terms of ARM's profitability at this point. I mean, the optimistic case, of course, is that ARM sits at the center of the long-term AI boom. The idea that it makes this energy efficient technology that allows for the making of efficient energy chips for data centers and that sort of thing. And so that's the optimistic case. However, it's hard to see how ARM makes a whole lot of money in the interim while we're waiting for the future to happen. And its model is still based on licensing and royalties, not in changing the world and on, ARM China, as you mentioned. And so the other problem, too, is that SoftBank wants to keep a very tight grip over ARM going forward, which is raising governance concerns. And so in some ways, the valuation that we're seeing is a bit more fantasy than fact. I mean, I could be wrong about that, but I think there are a lot of clouds on the horizon.
It seems there are some risks here that this IPO may not do as well as either SoftBank or other people want.
Absolutely. And at a moment when the global financial system is sort of, I wouldn't say we're teetering on an edge, but certainly 2023 has not turned out as well as people hoped. Certainly China is slowing. U.S. inflation is still a bit higher than people had hoped. And we're not really sure what the Fed is doing. So I would say a big IPO miss at this moment is not what the NASDAQ would be hoping for in New York, or stocks in Tokyo and Seoul and Singapore. So a lot is riding on this. You make a good point.
Okay, let's switch topics for a little bit. Just get your thoughts on the BRICS summit that's starting in South Africa. President Xi Jinping is there. He's pushing the BRICS to become a much more stronger economic force and also a political force as well to rival the G7, which of course Japan is one of the G7 G7. What's the thoughts from Japan on the role of the BRICS countries?
Well, I mean, certainly Japan is paying very close attention to what's happening with the BRICS, but I think that there are more questions than answers being provided at the moment in South Africa. And I think one of the problems that the BRICS is having is the idea that, come on, let's be honest here. This is all about China. This is all about a variety of emerging nations looking to ride China's coattails. And if China just said tomorrow we're leaving the BRICS, this grouping would cease to exist. I think it's wise. You can argue that President Xi Jinping in China is trying to grow the size of BRICS. I mean, basically there are, by some counts, 40 countries around the world or more that are seriously vying to join the BRICS. But I think, you have even Jim O'Neill, who coined the phrase. He's now sort of throwing cold water on the idea of, say, a BRICS currency going forward. So if you're not getting buy-in from Mr. Jim O'Neill, who arguably created the whole thing, it just raises a lot of questions about what the BRICS is at the moment and what they plan to be when they grow up.
It's hard to envisage, isn't it, a common currency across all these vastly different countries, which would presumably would need a common central bank as well to manage it all. I mean, given the problems that Europe has had doing that, it would be an almost impossible task, surely.
Absolutely. And also the BRICS has a Russia problem, right? I mean, in many ways, having this incredibly, basically controversial rogue state at the center of your economic grouping at the moment is arguably not where you want to be. I mean, certainly there's been an effort to move away from the dollar in recent years. Saudi Arabia is on board with that. The UAE is on board with that. Brazil certainly has been playing a leading role there. But a BRICS currency, the idea of these countries that arguably compete more than they cooperate, having a single currency. I mean, Europe is still trying to figure out the euro, never mind a BRICS currency. So good luck with that.
Okay, well, good to hear your thoughts on all of that, William. Thank you very much indeed.
Thank you, Peter.
That's Tokyo-based journalist and author William Pesek.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you very much for listening this morning. Don't forget to take a look at my daily newsletter, which is at peterlewismoneytalk.substack.com. I'll have more business and finance updates for you tomorrow. Joining me to discuss them is Andrew Ferris, the CEO of Econosis Advisory, and with a view from Taiwan is Ross Feingold, Business Development Director at SafePro Group. Please join me again tomorrow.
Money Talk.